Good morning. Today, we're starting with a major development that's sending shockwaves through the financial sector and raising questions about the future of one of Europe's leading fintech companies. We begin with startling news from the finance world, as Temenos, a global leader in banking software, finds itself at the center of a sudden leadership crisis. Shares of Swiss banking software giant Temenos plummeted 12% in a single session, erasing hundreds of millions in market value almost overnight. The dramatic drop left investors and analysts scrambling for answers. This wasn't due to poor financials or missed earnings, but rather the abrupt and unexpected departure of CEO Jean-Pierre Brulard. The announcement came without warning, catching both the market and Temenos employees off guard. Such abrupt exits create investor panic, wiping millions off market value. Investors often interpret sudden leadership changes as a sign of deeper, undisclosed problems within the company, leading to a rapid sell-off. The market's swift reaction reflects deep uncertainty and a lack of confidence in the company's immediate future. When a CEO leaves so suddenly, it raises concerns about the stability of the company's strategy and vision. Leadership continuity is crucial for a publicly traded company. Investors and employees alike look to the CEO for direction, reassurance, and a steady hand during turbulent times. The term immediate departure suggests unplanned, possibly contentious changes at the very top. It often hints at disagreements within the board or the emergence of unforeseen challenges that require urgent attention. Investors are left speculating about underlying issues, fueling further stock decline. Rumors and uncertainty can be just as damaging as actual bad news, as confidence in the company's leadership is shaken. This impacts not just corporate drama, but real-world investments and pensions. Many retirement funds and individual investors have exposure to Temenos, making this more than just a headline. It's a personal concern for thousands. Temenos' story today highlights how boardroom decisions can have immediate financial impacts, rippling through markets and affecting people far beyond the company's walls. We'll be watching closely as more details emerge about the reasons behind Brulard's exit and how Temenos plans to restore confidence among its stakeholders. Stay tuned for updates on this developing story, as the future of Temenos and the stability of its stock hangs in the balance. Who is Temenos and why is it crucial? Let's break it down. Temenos is a global leader in banking software, powering many banks' digital operations. From mobile banking to loan applications, Temenos ensures smooth, secure transactions. Headquartered in Geneva, it specializes in core banking systems, the backbone of financial institutions. With thousands of clients in over 150 countries, Temenos is a fintech bellwether. Its leadership disruption raises concerns about stability in the wider industry. Understanding Temenos' role explains the market's strong reaction to its CEO's departure. Why did Jean-Pierre Brulard leave so suddenly, catching both the industry and employees off guard? His abrupt exit has sparked a wave of speculation and concern, not just within Temenos, but across the financial technology sector. The board's official statement offers a few subtle clues, but leaves much unsaid. In times of leadership change, every word and omission is carefully weighed. Interestingly, they didn't point to poor performance or any specific missteps. Instead, they highlighted a strategic need for a different kind of leadership, one that aligns with the company's evolving vision. Chairman Thibault de Tersant underscored the importance of long-term stability and deep expertise in core banking technology, signaling a shift in priorities at the very top. This suggests that while Brulard may have been effective in the past, the board now believes he isn't the right fit to drive the next phase of growth and innovation. The company is at a crossroads, and the stakes are higher than ever. Temenos faces mounting pressure from both established competitors and nimble fintech startups. The technology landscape is shifting rapidly, with new digital banking solutions and customer expectations evolving at breakneck speed. The board is now searching for a visionary leader, someone who can not only navigate these challenges, but also inspire confidence and chart a bold new course for the company's future. This decision clearly reflects a desire for a leader with a stronger technical background, someone who understands both the complexities of banking and the opportunities of digital transformation. Public statements are carefully crafted, but behind the scenes, questions remain about what truly prompted such an abrupt change at the top. Was there a fundamental disagreement over strategy, or perhaps a clash of visions for the company's future? The lack of detail only fuels further speculation. What's clear is that the board has made a bold move, prioritizing long-term vision and adaptability over short-term comfort and stability. The immediate consequence has been a dramatic fall in the company's stock price, reflecting investor uncertainty and the high stakes of this transition. Now, the search for a new leader is not just important, it's absolutely critical for the future direction and stability of Temenos. Jean-Pierre Broulard's short tenure adds to investor unease. Appointed in May 2024, he served just over a year, a red flag for markets. His brief leadership disrupts strategy and creates instability. The previous CEO search took 16 months, raising concerns about succession management. Investors fear another lengthy search could delay strategic decisions. The cycle of long searches and short tenures fuels anxiety. Stability and consistent strategy are vital in tech sectors. The board's decision, while long-term focused, creates a credibility issue. Temenos must prove it can efficiently find a stable leader. Breaking this cycle is crucial for restoring investor confidence. With Broulard's sudden exit, Temenos faces a pivotal moment. The question on everyone's mind: who will steer the company through this uncertain period? In times of upheaval, stability isn't just important. It's absolutely essential for the confidence of employees, clients, and investors alike. Stepping into the breach is CFO Takis Spiliopoulos, now appointed as interim CEO. For many, this is a logical and reassuring move. Spiliopoulos is a familiar face within Temenos, respected for his steady hand and deep understanding of the company's inner workings. As Chief Financial Officer, Spiliopoulos has been at the heart of Temenos' financial strategy, overseeing budgets, forecasts, and risk management. His experience means he's well-versed in the company's operations, its ongoing projects, and the challenges it faces in a competitive market. His appointment is designed to provide continuity, sending a clear message to the market that Temenos remains on course. Investors and stakeholders are looking for signs of stability, and Spiliopoulos' leadership helps to calm immediate concerns. As interim CEO, Spiliopoulos' mandate is clear: maintain business as usual. He's not expected to launch bold new initiatives or make sweeping changes. Instead, his focus is on keeping the company steady, ensuring that day-to-day operations continue smoothly. Meanwhile, the board has already begun the search for a permanent CEO. This process is critical, as the next leader will need to bring not just experience, but a compelling strategic vision to guide Temenos into its next chapter. However, there are concerns. The board's history with CEO appointments has been mixed, raising questions about their ability to identify and attract the right candidate. The stakes are high, and any misstep could further unsettle the company. For Spiliopoulos, the challenge is twofold. He must keep the business running efficiently while also managing the uncertainty that comes with temporary leadership. It's a delicate balancing act, requiring both operational focus and strong communication. Reassuring employees and clients is a top priority. In times of leadership change, rumors and anxieties can spread quickly. Spiliopoulos must be visible, approachable, and transparent to maintain trust across the organization. His performance during this interim period will be closely watched by investors and analysts. Managing the company's reputation and maintaining investor confidence are critical tasks that will define his tenure. The pressure is intense. With the company under the spotlight, any misstep could have significant consequences. Spiliopoulos must navigate these turbulent waters with composure and resolve. Meanwhile, the board's approach to the CEO search is being scrutinized. Both the criteria they set and the speed of their decision-making will be judged by the market and the wider business community. Ultimately, finding a credible long-term leader is paramount for Temenos. The right appointment will restore confidence and set the stage for future growth, while a poor choice could prolong uncertainty and risk. Amid stock turmoil, Temenos reassures investors of strong business fundamentals. The company reaffirms its financial guidance for 2025 and 2028. This separates boardroom drama from operational performance. By confirming targets, Temenos aims to anchor investor expectations. However, the market remains skeptical, fearing leadership turmoil impacts targets. Temenos must deliver solid results to regain trust. How was Temenos performing under Brulard? The picture is mixed. Some quarters showed weaker revenue growth, causing investor concern. However, strong earnings before interest and taxes indicated profitability. Recent financials were positive, with upgraded forecasts. The timing of Brulard's exit, post-strong results, is puzzling. This suggests a strategic disagreement rather than performance issues. Investors face a confusing picture. Strong numbers, yet leadership deemed inadequate. This fuels uncertainty about Temenos' future prospects. Temenos' stock drop shows market aversion to leadership uncertainty. A CEO is the public face and strategist. Their sudden exit creates a void. Investors face unsettling questions about leadership and strategy. This uncertainty increases risk, often leading to lower stock prices. An abrupt change signals potential internal conflict or flawed strategy. Investors buy into future growth, heavily reliant on CEO leadership. A sudden exit disrupts this roadmap, making the stock riskier. The nature of departure matters. An immediate exit implies crisis. The market's severe reaction reflects this alarm. Until a new leader is in place, uncertainty clouds Temenos' stock. Leadership stability is crucial for market confidence. What are the key takeaways from Temenos' dramatic day? It highlights the value investors place on stable leadership. Succession planning is crucial. Temenos' repeated CEO searches are red flags. Investors must consider governance quality beyond financials. The board's focus on long-term strategy over short-term performance is bold. This move's success will be judged in years to come. Leadership is a hard asset impacting market value. The market's reaction was a vote of no confidence in leadership stability. For investors, leadership matters as much as financials. Pay attention to who's in the corner office. It impacts the company's future.